What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol APPS for Digital Turbine. On the left-hand side, we're looking at the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. This will be more of an update since we did cover it in recent history here, but obviously the elephant in the room is the large gap up that happened on today's session on the news, essentially, that it will be included in the S&P 400 mid-caps, okay? So for now, because we have a gap in the chart, we have to at least consider that underneath today's low, there is possibility for a gap fill to the high of the prior day, which is right around our 53 whole dollar. That being said, that's about a $6 move available to the downside if that short does pan out, but there are some things that need to happen before that trade essentially unfolds. Very quickly, I do want to go on over to the trade tab. You can see that you can short this one via shares. It's easy to borrow. And if we look at the options chain, it's actually not that attractive as a put side candidate simply because there's not a ton of volume here. I mean, don't get me wrong, there's some, but it's not overwhelming. It doesn't look like there's a ton of liquidity in this general area. So for now, I'd stick to short shares and or maybe, small size in the options contract if that situation unfolds. But as I've said, there's some work that needs to be done before that even comes into play. If we just clean this chart up, you can clearly see that our prior daily structure here at 59.44 kind of sliced through the middle of our consolidation. I would say, again, we can clean this up if we actually grab that line. There we go, remove drawing. And what we'll do, of course, is map out the lows of this first pullback and the highs of the day close to around 61 the whole dollar. So for me, I would, ideally like to see a recapture of 59, bullish consolidation in this area, and then a breakout ensuing over 61. And looking left from the daily perspective, you can see this large red candle didn't leave us a whole lot of market structure in its wake. So I would say bump in the road at the daily 50, bump in the road at the daily 200 SMA, and then ultimately looking for the target to hit here at 66.58. That's the best case scenario in my opinion. The second best case scenario would be if we look at this through the lens of the Fibonacci tools going from low up to the high. You can see the 38.2 is very close to that first pullback low. So I would say 59 is really the number to watch. And then the 61.8, you can see into the end of the day when that second sell did come, we broke the 38.2, broke the 50, and then stopped at the 61.8. So that's going to act as a line in the sand to remain bullish here. If we can hold on to that 57, or let's just round up to 58 the whole dollar here, if we remove that, that's going to be the line in the sand. Any recapture here, again, look for that consolidation, then potential breakout into the future. If we give up 58, start to be on the lookout for this, maybe a flush point to develop here down around 56 the whole dollar, and then the gap to fill underneath. So those are the three scenarios I would really monitor for here in apps, and those are my thoughts. That's how I would play it here, probably favoring the short shares instead of options given the light volume in the put side of the contract. So all things considered, three scenarios, watch them closely. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.